Hi everyone, how are you? Welcome to Virginia Webinars. This webinar is titled How to Pass the AFM 1 Exam. Can everyone hear me? If we could just get some messages in the chat. Great. Great. It looks like everyone can hear me. Okay, welcome everyone. So we all know why we're here. We're here basically to get the solutions for the AFM exam next month, yeah? Well, unfortunately, we don't have those solutions. However, what we will be doing tonight is discussing how to put your best foot forward in passing the AFM 1 exam. Now, the AFM 1 exam is hosted by the FMI, the Financial Modeling Institute. You should already know that. Otherwise, I don't know why you're here. So let's get started. Now, before we get started, we'd just like to introduce ourselves. We are the Virginia Institute of Finance. We are a financial training and consulting firm based or out of the US, out of Virginia. And we have an office in the Middle East in Dubai with a new office or another office opening up in Riyadh. So most of our geographical allocation is actually in the MENA region. We are a US company originally, and we do offer courses in the US. We have just a quick brief on Virginia. We offer our training courses in 4 verticals: in finance, in data analytics, and risk management, and any specialty behavioral courses such as leadership, or the more commonly or the most popular, I should say, certification, the PMP certification. So if you're looking for any trainings in any of these 4 verticals, please reach out. Now, let me take a moment and introduce myself. My name is Fareed Sadeh. I am a consultant with Virginia. I deliver trainings in finance, investments, and data analytics, as well as financial modeling, of course. I am an AFM holder. My co-host is William Shakarian. I'll let him go ahead and introduce himself. William?
Hello, everyone. I'm William. I am with VIF. I am based out of the Washington, D.C. area. I am as well in AFM level 1 from FMI. My focus areas are in real estate, finance, and data analytics. And I will be managing the chat window. So if you have questions along the way, please make sure to ask, and I will regulate and share them with Fareed for him to comment on.
Thank you, William. Thank you. So let's just take care of a few housekeeping issues. So this webinar will be recorded, and you will receive a copy in your email after the event. Within the next 24 hours, you'll receive a copy of the webinar. So you can rewatch it at any time. So for those of you who are preparing for the exam, this can be essentially your cheat sheet. Please, as William just said, send in your questions, and every 10 minutes or so, we will go ahead and answer them. And even William, as you know, if they're relevant to the topic at hand, let's answer them as they come. And if you have any issues, please send a comment. Let us know. William is here to take care of any questions and any issues that may arise. And again, if you would like to see any more of our webinars, please visit our website at viftraining.com. So with all housekeeping issues taken care of, let's go ahead and discuss the exam. So the AFM 1 exam is the Advanced Financial Modeler exam held by the FMI, the Financial Modeling Institute. Everyone here should be registered and ready to go come exam day. Now, the exam will be held next month, October 24th, on Saturday, and due to the way the world is right now, the FMI has actually adjusted the normal method of exam taking. So instead of going to a test center, the exam can be administered on your personal device. However, your screen will be recorded, of course, for just to make sure everything is in order. And again, it will, from what we understand, it is still going to be a 4-hour exam. And the exam is simply going to be a case study that that requires you to complete 7 individual model schedules, a set of financial statements, meaning the income statement, the balance sheet, the cash flow statement, completing a summary sheet, highlighting the main pieces or relevant pieces of information from the financial model, from the case at hand. And finally, you are required to incorporate a scenario sheet with 3 scenarios which we will discuss. And those scenarios have to be integrated into the financial model, keeping it dynamic and still possessing the model attributes, which we will again discuss. So, like we said, this webinar is simply going to be essentially a VIF, best tips that we can come up with in order to help you pass the exam the first time. Now, if you're familiar with financial modeling, you will probably catch on to to what we're talking about a little bit quicker. But there are little nuances that the FMI appears to want to see from their candidates. Now, we are a certified training partner with the FMI, but the FMI does not actually provide any sort of grading scheme that we are aware of. Now, everything that we have concluded to in this presentation is from the source material that the FMI provides free on their website. So everything, for the majority that we have concluded in this presentation, you can refer to on the FMI website. They have a couple of practice financial models for you to review and to practice with. So come test day, you will be completely prepared. So let's discuss these 6 modeling attributes. Now, we don't want to spend too much time here. What we'd like to do is dig into the actual financial modeling schedules, which we have certain points that we want to make on each schedule, and how William and I recommend that you guys go about constructing your financial model come test day. So the six modeling attributes, these are provided by the FMI. They have a whole document on these, as well as many other things. You should really refer to their website before you take your exam as you prepare. But every financial model needs to be dynamic, flexible, intuitive, transparent, printable, and transferable. So the model needs to be dynamic in the sense that the outputs, your model schedules, should change based on the change in inputs. Your model should be flexible in that if you ever need to make an adjustment, such as adding a new piece, a new layer to revenue, or a new cost structure under your operating expenses, your model should be able to be flexible enough that you can incorporate it without breaking your financial model. Okay? Your financial model needs to be intuitive in that it needs to be easy to understand. Now, keep in mind, financial modelers are not programmers. We as financial modelers, use Excel to construct financial statements, right? To solve problems. So the model needs to be easy and intuitive to, it has to be intuitive, easy enough to understand, and it has to be, intuitive to a sense. Basically, it has to make sense, right? the model has to be transparent, meaning that the complex should be presented as simple as possible. So that would, one simple example would be not to have too many nested formulas, to kind of break out that nested formula into its individual components. This will allow any reviewer to go through the model and interpret it easily and follow along much easier than digging into giant long nested formulas, right? The model should always be printable. Now, this is one of the key attributes that the FMI looks for. We'll discuss this in greater detail later. Now, when I say the model needs to be printable, it just means that when you complete your model, you should be able to print it and hand it over to senior management. Now, most senior management are not super Excel savvy, and they prefer to see things printed out. So this is something that every modeler needs to keep in mind. Just because you're comfortable as a modeler with Excel, well, you should be very comfortable with Excel, right? It doesn't mean that other professionals are comfortable or as comfortable as you are. So every model needs to be clean and just ready to be printed. Again, we will discuss this in greater detail later. And the model needs to be transferable. Now, and what transferable means is that the model should be, I should be able to pass my financial model on to William without having to sit and explain to him all the different nuances, all the specific nuances inside of my model, like for an hour, right? I shouldn't spend too much time briefing him on what my model, on how my model works. It should be, this kind of goes back to the intuitive and transparent attributes. But I should be able to pass my model on without too many issues. William, is there anything you'd like to add to any of the 6 attributes?
The easy to understand and follow, as well as having consistent formatting. Making it easy for people who are not deeply involved with the creation of the model. If it's easy for them to follow along, quickly to get the key points, it's a much more useful and robust model. But having standardized formats as well as layouts goes a long way to making it easy to share.
Great. Thank you, William. So yeah, and this is something very important for the come exam day. We will speak a little bit more about that as time goes on. So let's just discuss again what the FMI expects from you, right? You're here to kind of get your cheat sheet. You understand at a high level what you need to construct. Let's dig in a little bit more. Now, you are basically asked to construct 2 input sheets, 7 calculation sheets, or I should say calculation schedules, and 2 output sheets. Now, your input sheets are going to be your assumption sheet. This is where all of your assumptions go in. Okay, this includes everything from your inflation rate to your cost, your per unit sales price to any historical pieces of information you might want to incorporate. Now, come exam day, the only things that you will get are an Excel book. Okay, you'll get an Excel book with a cover page where you'll fill in your details, and you'll have one other sheet that is 3 years historical financial statements. This is how the exam has been, and unless I have not heard, I don't believe they're changing that structure. That's pretty much all you're going to get. You will receive a document, roughly 2, 3, or 4-page document that has your case study with a list of assumptions that you need to make. Okay, so essentially the goal is to take that historical information with your case study and build your projections. Okay, typically they ask for 5 years or so, but they could ask for more. It really does not matter what the projection periods are. What matters is the construction of the individual schedules. So going back to the framework or the shell of what you need to construct, you need to have the two input sheets, your assumption sheet, again, which will house all of the assumptions that you will extract from the case study, and you will have a scenario sheet. Now, the scenario sheet I will save for last, and I have a specific reason for that. But let's move on to your actual calculation sheets. Now, you will construct 7 calculation sheets. This means you will construct one revenue sheet, and I'm sorry, I keep using the word sheet instead of a schedule, but you will construct 7 schedules. Whether you want to use individual sheets or not will be up to you. We'll get to that in a moment. But you will have to construct 7 individual schedules. A revenue schedule, an operating cost schedule, which will house both of your cost of sales and your operating expenses. A working capital schedule, your depreciation schedule, an income taxes schedule, a debt schedule. Your debt schedule will house your revolver. Okay, we'll discuss the revolver once we get to the debt tips. And finally, your equity schedule. Now, these schedules can interlink between one another. For example, working capital is actually based on your revenues and your costs. So you will have items that link from your revenues and your operating costs directly to working capital. The same goes for your income taxes. Your income taxes will actually have inputs from your financial statements. Your debt schedule, your equity schedule will as well. We will discuss these in greater detail, but these calculation sheets are where your calculations will be housed. Your output sheets should simply be, ideally, links from your calculation sheets. All the calculations should be done in your calculation schedules, whereas your financial statements and your summary sheets should essentially just be links for the most part. Except for the totals, they should be links. There are a few items that you can calculate on the financial statements themselves. However, that is entirely up to you. Again, this constraint will be due to how much time you have left and how comfortable you are performing that, right? Now, let's go back to the scenario sheet. The scenario sheet is where you will create your 3 scenarios. The FMI requests that you create, 3 scenarios: a base case, an upside case, and a downside case. These are typically, unless they state, unless they give you specific instructions left to interpretation of how you want to calculate that. But those scenario sheets will basically be left for you to interpret. The FMI leaves it for you to kind of put your spin on it, and basically, as long as the model makes sense, you will be fine. Okay, we'll discuss this in a little bit of greater detail in a moment. But let's go back to that statement I made: sheets versus schedules. So the FMI allows you to construct your model in basically one of 2 ways. You can have a horizontal tab structure or a vertical tab structure. Now, the horizontal tab structure is actually the tab structure that we at Virginia recommend you do. There's several reasons for this, but it has mainly to do with formatting. You can format much faster in a horizontal sense than you can in a vertical sense. Now, what do I mean? When you construct your financial model, you have to put a header. So I'm kind of skipping ahead now, but I need to make this point. The header, this header, where it has the title of the model and the sheet you're on, as well as the years and the units, etc., needs to be, or it should be replicated across all of your sheets. Now, if you've done this on one sheet, essentially your assumptions sheet, you can replicate this, by simply copying and pasting across all of your other sheets. This can save you a good amount of time. So William and I actually recommended, we at Virginia actually recommended to follow the horizontal tab structure. That way, each sheet is exclusive to one of your schedules. You can have one sheet exclusive for revenue, one sheet for cost, taxes, working capital, exactly as you see on your screen. And in fact, if you recall, I mentioned the FMI gave you practice exams or practice financial models to refer to. Well, this is the vertical financial model that they have on their website for you to download and to refer to. And again, everything that we are doing, we have essentially compiled or gathered from these two financial models. They have basically, the FMI has been very generous in giving you two perfect financial models to use for your practice. So take advantage of it, refer to what they did in their exam or their practice models. And this is essentially your application of our tips, okay? As you can see, this is the vertical method where the summary sheet, the assumptions sheet, and the scenario sheet are on their individual sheets. However, all of the other working sheets are on one sheet. So everything is built vertically. They begin with revenues, and then they go down to cost of sales. And then they incorporate their income statement, balance sheet, and cash flow. We would recommend that you keep those your output sheets on their own sheet. However, this is entirely up to you. As long as the model is accurate, as long as it makes sense, and as long as it's printable, you should be good to go. Now let's go back so we can move on. So we can move on past our tab structure. We have a few model construction tips. These are tips that we give in our financial modeling course. So this is just something for you to keep in mind. Get comfortable using logical functions such as the if function and or function. You need to be comfortable with the choose, index, or offset functions. Okay. We advise you follow the law of one formula, basically having one consistent formula per row. Now some of these are more applicable to you come test day than others, such as the same column structure, the printing and formatting, and the lookup and reference functions. Now, the same column structure just makes it easy for you to not make mistakes. If you keep all of your FY 2020s in one column across all of your sheets, you can quickly check your financial model in case your balance sheet doesn't balance, right? Now, let's just talk about printing and formatting really quickly. You're going to hear a lot about printing and formatting in this session. The FMI is very adamant that every model needs to be ready to be printed. So we will discuss what our method is, but you basically need to ensure before you're done that your model is ready to be printed. Now, like I said, there isn't an actual guide or a scorecard that you can refer to, but there are things that the FMI has basically stated that they want to see, and that includes the cleanliness of the model, the presentation of the model. Is the model printable? Does the model make sense? They want to see that your model can be used confidently, right? That the person who constructed it built the model confidently. Yeah. That means as a reviewer, they can, it's clear that the modeler knew what he or she were doing, right? This is essentially what your goal is. So before you begin your model, you just want to ask yourself a few questions, okay? So what layout are you going to use, the vertical or horizontal method? We, again, recommend the horizontal method because you can save time in constructing your structure for each of your working sheets. And again, and then you should ask yourself, what variables are you going to sensitize? We have a few variables that we suggest you always sensitize, and that is typically inflation, sales volumes, as well as sales price, because these will have the greatest impact on your financial model. And then you want to ask yourself, what inputs do you have available? Of course, if you want to use I don't know, one variable and you don't have it, then you can't do that. So these are just things to keep in mind as you construct your financial model. So this is the design. This is essentially what a perfect, if I do say so myself, perfect financial model looks like. You can see that the header is there. The name of the sheet is there. The historicals are clearly identified versus the projections. You have your case running in the top right-hand corner. Your totals are highlighted and distinguishable from the rest of your inputs. or the rest of your line items. You have your units highlighted separately in their own column. This is an example of what a perfect, at least from what we would suggest. This is what a very well done presentation of a financial model would look like. So now let's just talk about the outputs. We know what the original three outputs are: the income statement, the cash flow statement, and the balance sheet. However, you have another set of outputs that the FMI wants to see, and that's your summary outputs. Now, your summary outputs are basically your high level, okay, your high level key pieces of information that you want to demonstrate, that you want to highlight. This sheet is not, there to restate everything that's done in your financial model. This sheet is simply to present I guess I should say, the most relevant pieces of information from your model. So, typically we suggest you break it down by financial statement. So first thing should be your income statement, then your balance sheet items, and then your cash flow items. On your income statement, you should highlight the most important, or the biggest piece, the things that have the biggest effect on those statements, right? We know that revenue, EBITDA, and net income are typically those items. Your balance sheet, you should highlight your debt items, or your debt totals, I should say, your asset items, your liability totals, and again your shareholders' equity, and then any ratios, in terms of liquidity or solvency, you might want to add. And then your cash flow statement should be at a high level, at least your operating cash flows, your capital expenditures, your investing and financing cash flows, maybe your closing cash, free cash flow to the firm, and equity. Kind of add an additional piece of information there, a relevant piece of information. But this is what you should keep in mind when you're constructing your outputs. Okay, so let's give you our exam day process. This is how we recommend you go about constructing your.
Sorry, hold on a second before we jump into the exam day process.
Yeah.
One question did pop up from Ruben. Do we recommend to use different files for each schedule instead of different sheets? So unfortunately, the FMI requires you to submit one specific file comprehensive of all your work and schedules and sheets, and they have a naming convention. So make sure you save your file early and often.
Yes, very good point, William. Very good point. Yes, William is absolutely right about that. You need to have your entire financial model in one Excel book. You can construct the schedules on their individual sheets, but everything needs to be in one book. And yes, the rule of thumb with modeling in general is save early and save often. So very good point. So let's discuss how we believe you should go about constructing your model come exam day. So keep in mind, you have 4 hours to construct your model. And that includes reading your case, taking any notes you might want to take, formatting, balancing your balance sheet, making your model printable, and basically submitting, right? So this is how we think the best way to go about constructing your model should be, okay? The first thing you should do is read your case twice and take handwritten notes. Read it twice because you should read it once just to have an idea of what's going on, and read it a second time to ensure you did not mistake it. Take handwritten notes. You're allowed a pen and paper to write down whatever you need. I know that when I took the exam, I took plenty of notes to make sure I didn't miss anything. Okay. Now, the third thing you should do is create the layout and design structure of all of your sheets. So at this point, you should know whether you're going to follow the vertical or horizontal method. You should come into your exam already planning this ahead of time. You don't want to come and spend any of the 4 hours planning how you're going to build your model. Everything should be basically planned ahead of time so that when you start, you are ready to, you're just ready to start construction, okay? This is a very rigorous exam, and it's rigorous due to the time constraint. If you had more time, you could probably build the model much more comfortably, but part of the challenge is constructing your full your fully operating, dynamic and integrated financial model in those 4 hours, right? So it's not just accuracy, there is speed that needs to be involved as well. So one of the major tips that we recommend is create your layout with the header, with the years and the dates and everything, and copy it across all of your sheets. Remember, you have 7 working sheets, and you have 2 output sheets and 2 input sheets. So that is about 11 sheets in total, okay? The next thing you should do is, after you've done that, fill in your assumptions, okay? You do not want to fill your assumptions in as you go sheet per sheet. Fill in your assumptions first, get them out of the way, so that once you start constructing, you can simply link back to your assumptions, okay? Then begin with your revenue schedule. Revenues should be the first thing you calculate, because this is where your volumes and your units, or whatever it may be, whatever the driver is of the model of the case that you're given, should be presented, okay? So after you construct your revenue sheet, move on to your cost of sales sheet, and then from there it's really up to you. But these should be the first 2 sheets that you construct, because you have one specific sheet that's 100% dependent on these 2 sheets, and that's your working capital sheet, right? So if you want, construct your your revenue sheet, your revenue schedule, your operating costs and work and cost of sales schedule immediately after. Following, construct your working capital schedule, then your income taxes schedule, and so on and so forth. Okay? The order after that doesn't really matter. Now, as you construct, you will have some open items. Now, what are these open items? For example, under your income taxes, you're going to have to basically hold off on integrating EBT, earnings before taxes. Okay? You can't fill that until you construct your financial statements. So, what we recommend is construct all of the schedules as is, but just leave those areas blank. Another area is going to be your cash balance for your interest income. You can't incorporate your cash balance until you construct your financial statements. And again, obviously, your equity statement has retained earnings, so you can't incorporate net income until you construct your income statement. Okay. After you've constructed all of your working sheets, hold off on your revolver. Do not construct your revolver until you finish construction of your 3 financial statements. Okay, your revolver should be last, because it's going again to be dependent on your on the completion of your financial statement. So,
Sorry, I have a question that's fairly relevant. Now that you've completed your schedules,
yes,
would you suggest naming or referencing cells and regions, naming your cells and regions?
Okay. So the FMI they haven't stated whether they want to see this or whether they don't want to see this. So this is entirely up to you. Now, if you're very comfortable with Excel and you can construct your model and have it balanced and have everything be just as good as it would be without naming your cells and ranges, then by all means, I don't see why there's any reason that this would be this would go against you. However, if you're not 1,000% comfortable doing that, we would recommend just linking the statements or linking your items as is. Okay, you only have 4 hours, so if you end up making a mistake, this could cost you precious time, and while you're constructing, the time will fly by. It's really up to you. It's not wrong if you do it, but the thing is, it can cost you, drastically if you make a mistake, right? So, we're just
Thank you, Fareed. We have another question.
Yes.
Do you have an example of what would be given for the case on exam day? Yes. So available through the FMI website, they do have an example exam and a case study essentially.
Yes.
If you register via FMI to sit for an exam, they will provide you multiple scenarios. I believe it's 2 full-length exams with 4 solutions for both. But typically what you receive is a PDF document, but if it's in person, they print it out. And then the trailing 3 years typically of the financial statements in Excel for the subject case study.
Exactly. You are literally given the bare bones of what you need to construct the model. You have a blank Excel book with 3-year historical financial statements, and essentially a PDF. The rest is up to you. So if your accounting isn't where it needs to be, if you don't know how the financial statements integrate, you will have trouble with the exam. So, okay, so going back to our process, so we left off at you need to refer back to the historical financial statements, right? You've constructed all of your schedules, you've highlighted your open items, and now it's time to construct your financial statements. We recommend going back to leaving the historical tab as is, however, duplicating it or copying the information from there into your income statement or into your financial statements tab, so you can literally just build off of it. You just want to build the forecasted period, the forecasted line items that you're linking from your working sheets or working schedules. So then, after you've linked them, you should go back to those open items. The items under income taxes, retained earnings, interest income, and of course your revolver, and complete those. After you've done all of that, create your summary sheet. Now keep in mind, your summary sheet should be links directly from your 3 financial statements, as well as maybe if you want to highlight the volumes and the average price per unit, you can pull that from your revenue sheet, right? Now, we recommended constructing your scenario sheet last. This is because your scenario sheet is typically you're only going to incorporate a couple of pieces of information, right? If you look at the examples that the FMI has provided, they have kind of followed the same 3 pieces of information every time. They have always sensitized inflation, they've sensitized volumes, growth rate, and price per unit. So this is something that we see as a constant. Hence, we recommend you do the same thing. So construct your scenario sheet at the end, and then link it or integrate it into those 3 areas that it needs to go in. Okay. If you can do all this within 3.5 hours in your own time, okay, not come test day, but in your own time, you should be ready to take the exam come test day. Now, of course, you're going to be a little bit nervous, you're going to be a little bit stressed, so that may hinder your performance a little bit. But if you're able to do it on your own in 3.5 hours, you should be ready to go come test day. So here are our master tips. Okay, come in with a game plan. Decide what method you're going to use, and which construction method you're going to use, the vertical or the horizontal method, and stick to it. Okay, you want to save every second that you can in order to basically move as quickly as you can. Right? Like we said, this exam is very rigorous. You're going to be very tired when you're done, but you need to ensure that you have both speed and accuracy. Okay, so another tip that we have is follow the structure of the models provided. Now, they've given you sample solutions. Refer to them. Use them as your practice material. Okay, if you can reconstruct their financial model from scratch in 3.5 hours, then you should be fine come test day. You should be fine. Now, again, this is all going to take, your stress levels are going to come into account. The case itself, whether it's more complicated, is going to, be a factor, and many other things at play. But we believe you should be fine, and they also advise the same thing. Now, keep your model simple. You don't need to overcomplicate it. They are asking for, a 3-statement model. Okay, you don't need to incorporate macros. You don't need to make the model extremely sophisticated and fancy. You just need, there's a saying in modeling that the whole point of modeling is to take something complex and make it simple, right? That's what you're doing here. You're taking all of this complex, all these complex pieces of information provided to you, and you're trying to present them in the most simple way. So keep this in mind. Don't overthink it. Okay. Now, one tip that we have, and William and I highly recommend this, is come in with a few formulas or a few Excel functions that you're very comfortable with. Okay, These are the functions that you that you need to be comfortable with, because you should be using them very quickly as you construct your model. What am I talking about? So let's refer to their financial model. This is the AFM's sample model. As you can see here, this is their scenario sheet, right? And their scenario sheet, this is essentially, they are sensitizing their inflation rate, okay? They're sensitizing the inflation rate of the case study. And what they've done here is they've incorporated a base case, an upside case, and downside case. Here they use the choose function to basically determine what scenario they're under, okay? Now there's many different ways to construct this one item, and the choose function is not the only way. You can use the choose function. You can, I know William is partial to the index function. I actually prefer the choose function. You can use the if function. It really doesn't matter. There's many ways to do the exact same thing, but you should be comfortable. You should use what you're most comfortable with, okay? And the other thing in relation to the choose function is, if you want to incorporate the developer tab, if you want to turn the developer tab on or not, okay? This drop-down box is only here because in my model or their model, they incorporated the developer tab. They have a second financial model, which we can go ahead and take a look at and see that they didn't use the choose function. They actually used the if function. Now the if function is a little bit longer and it can get a little bit messy. That's why I'm more partial to the choose function and William to the index function, but it's really, again, whatever you're comfortable with, okay? Again, it's—
Patty, question about—
Go ahead.
So the base case is given to us essentially in the description of the scenario, but how do you generate the best and the worst case assumptions?
Sure. So this is one of the subjective assumptions you need to make. So we will discuss this later in the presentation, but basically the FMI leaves it to you. You can be as extreme or as conservative as you want. However, it needs to make sense. Typically, in an upside case, you can basically allow you can allow the assumption to be 10% higher, and if in the downside case, you can have the assumption be 10% lower. Now it's really up to you, but there needs to be some sort of consistent. There has to be some logic to it. Okay, I mean, it doesn't make sense to kind of grow inflation at 50% in your upside case and minus 1% in your downside case, right? Those are very large ranges. So this is, again, it's open to your interpretation. However, it needs to make sense. What we would recommend is looking at the solutions that they have provided off of their website and kind of get an idea of what they did there. I'm partial to the 10 and 10, 10 upside, 10 downside. Okay. So now, the next thing I want to discuss is sense checking as you go. Sense check your model as you construct each schedule, as you construct each sheet. Don't leave the sheet and hope that you did it right. Take 1 minute, okay, 60 seconds, going back and checking your calculations, your inputs. Just make sure what you did makes sense, okay? And trust me, it will save you a lot of time at the end when you have 10 minutes left and your model isn't balancing. Hopefully it balances, but assuming it doesn't balance, you will be much more comfortable. You'll have an idea of where to look if you went and spent those 60 extra seconds just reviewing your schedules, right? Also, make your sheet printable as you go. Don't wait till the end to make your sheet printable. Again, you want to get as many points as you can. We know what the FMI wants to see, so you want to do your best to cover as much as you can, even if your model doesn't balance, and we'll get to that later. But another thing I want to comment on is be careful of your signs. Okay, your pluses and your minuses. Your cash flow statement, nothing needs to be said there. Your balance sheet, nothing needs to be said there, but your income statement. Okay, ensure that if you're going to make your costs negative, keep that consistent and ensure that your calculation, your totals, reflect that. If you want to keep them positive, again, keep it consistent, but also ensure your calculations reflect that as well. Okay, now, if your model doesn't balance, okay, Do not waste all of your time trying to balance your model. You have many other you have many other areas you need to complete, and we recommend that if you've done your schedules correctly and confidently, and you've tried to integrate your financial model and it doesn't balance, work on those other areas, okay? Finish them as quickly as you can, then come back to the model and try to balance. You want to get as many points as you can. If you know every single thing has been calculated correctly, and you know you just didn't capture one of the line items, but the model is printable, all the schedules are done correctly, your scenarios are incorporated correctly, you know, I don't think that you will fail the exam. So again, use time to your advantage. Finish everything you can, and then save this one thing for last. Okay. Now, this is where we have the tips per schedule. So I'm kind of going to speed through them. However, you will have a copy of this presentation. You can rewatch this webinar, and you can basically refer to each of these items. Okay. Now, the first schedule is your revenue schedule. Now, the inputs are your volumes, your price per unit, and your inflation rate. Okay. You also have capacity constraints. This is the maximum that production you can produce. Do not forget to incorporate this into your calculations. Okay. It's an easy thing to overlook. It's a very easy item to overlook, but make sure your calculation incorporates your capacity constraints. Okay. Now, there's something constant that we see constant across their financial models that the FMI provides, and this is freight and warehousing. I don't want to spend too much time here, but basically refer to their models and you know really understand the constants. You know, and this isn't exclusive to freight and warehousing. This is all encompassing of the FMI's models that they provided. Identify the key pieces of information that are constant across all the models and ensure that you know how to incorporate them. Okay. And again, make sure your sheet is printable. Take the 30 seconds to make sure your sheet is printable, and then take that extra minute to sense check the model. Okay. Now, in terms of operating costs, there's one thing I need to add. Now, and this isn't exclusive to your operating costs. In your working sheet, if you're ever linking or incorporating, I should say, a piece of information from another sheet, okay, under operating costs, you will incorporate the volumes and you will incorporate inflation. Okay, these are two pieces that need to be in your operating cost sheet. Highlight whatever you have incorporated at the top. Okay, highlight them as they have done in their financial models, in their practice models. So this is the AFM's horizontal financial model on their website. Okay, refer to the annual. You can see here that the annual sales volume and the inflation rate are both highlighted at the top before you actually got to the calculation of your variable costs and your fixed costs. Okay, so just ensure that whatever sheet you're on, if there's information coming from a different sheet, highlight it at the top. And also, if you can differentiate the totals like they have done here, that will also help. Okay.
Farid, we have a good question. You have mentioned making sure your sheets are all printable.
Yes.
Would you show us what being printable actually means?
Yes. So under your bottom right-hand corner here, if you can see my screen, you can still see my screen, right? You can see that there's a normal view, a page layout view, and a page break view. This page break view is basically how the sheet will print. So what we recommend doing is, before you move on from one sheet to the next, as you finish each sheet, hit Control Print and ensure that the sheet can, that the sheet will print. So you can print the selection and just make sure that the area is highlighted. Okay. I don't want to spend too much time here. We do offer an e-learning course exclusively to prepare you for the AFM 1 exam. We have an e-learning and a virtual live training. If you're interested, please refer to our website. We will be holding a 5-day virtual live course from the 11th to the 15th of October our e-learning course is already up and can be purchased at any time. We dig into the details of every single one of these schedules and the best approach to calculate, to tackle them. So this
Thank
is
you, Farid.
Yes, of course. So let's continue. Yeah, so take that minute, basically, oh wait, where was I? Yeah, so and make sure you bring those pieces of information, you highlight them at the top, and again, make your sheet printable, and take that extra minute to sense check, okay? Now, a couple of tips about depreciation. You'll have a couple pieces of information, you'll have your additions amounts, you'll have your useful lives. Make sure that those are highlighted at the top, but keep in mind, you don't need to create a full capital expenditure schedule. You just need to create a depreciation schedule. Capital expenditure, or your fixed assets, is something that can be calculated on your the face of your financial statements to save you time. However, if you want to create the schedule, by all means, go ahead. I actually prefer creating the schedule to ensure that all of my sheets are they incorporate all of the information that needs to be for that individual schedule. That is up to you. Something about the depreciation schedule, though, is you need to be comfortable using HLOOKUP or XLOOKUP. We recommend you follow what the FMI has done in their example models. This includes incorporating this exact waterfall depreciation schedule. One thing I do need to comment on here, each and every row, okay, the rows for your depreciation schedule need to be one formula from what we can tell. Now, one thing we need to highlight here is you can see that in the first year of the addition, the depreciation is essentially halved. This is a mechanism that you need to incorporate in your financial model, that the first year of your depreciation for any new asset needs to be 1/2 the total amount. And then after that, the asset can be depreciated in a full year, okay? This is just something to keep in mind because it is something that we've noticed is a constant across all of the financial models. Now, something about the working capital schedule is you need to use, besides highlighting the revenues and the cost of sales, you need to use the actual days per year. You need to do this by using the days formula. Okay, if you're not familiar with the days formula, get familiar with it because you actually need to incorporate the actual days per year, not using a rounded 365 or 360 days per year. Okay, and again, you need to make the sheet printable and take that extra minute to sense check your model, make sure that your changes in working capital have been calculated correctly, make sure that your working capital has been calculated correctly, and that you've used the correct pieces of information to calculate and project your accounts receivable, your inventories, your payables, and your other assets and liabilities. Okay. Now, in terms of income taxes, we don't have many tips here. You just need to ensure that you have done your calculation correctly, that you've incorporated the timing difference correctly, and again, that the sheet is printable. Now, keep in mind, you cannot complete your income taxes sheet in full until you complete your financial statements, because you do need to incorporate your earnings before taxes. Now, in terms of your debt and interest expense tips, your interest expense is essentially a different amount to your, it's exclusive from your repayment schedule. Your repayment schedule, you will typically, from what we've seen, you'll receive a debt repayment schedule. That will be its own thing. Your interest expense will also be its own thing. Your interest expense, as we know, goes to your income statement, whereas your actual debt repayments, goes to your cash flow statement. Now, in terms of your interest expense, there's one thing we need to discuss. I know we're coming up on time, but this is a very, very important thing. We do recommend that whenever you calculate interest, avoid circularity. Okay? Use your opening balance to calculate your interest expense. Do not use the average of the opening and closing balance. Now, the opening and closing balance is more correct. However, for the purposes of the exam, it's not 100% necessary for you to use the average of the opening and closing balance. You can use the opening balance. However, you should make a note, just letting the exam reviewer know that you did this intentionally to avoid a circularity. Okay? If you have a circularity, this will cause lags in your model, and basically, you could potentially construct your model correctly and have your balance sheet balanced, but because of the circularity, something will lag in the calculation, and your model will just keep showing that it's not balanced, and that will, probably make you a little bit crazy, especially due to the time constraint. So we recommend you avoid circularity, avoid macros, just practice constructing your debt schedule and your revolver using, and your interest expense of those two items specifically, using the opening balance. Okay. Now your revolver again should be constructed after you've constructed all three of your statements. However, we advise that you still use the opening balance. Okay. Now, in terms of shareholders' equity, there's again not really too much to say here. You have your common. You typically have your common shares, your preferred shares, and then you have your shareholders' equity. Now, there might be other items that their balance sheet will hold. However, if they don't give you any instruction, typically they will give you some sort of instruction of what to do with those not so common items. We just do what they tell you to do for those items. However, these are the 7 traditional schedules that you will be constructing. So going into your financial statements now, you know that on your income statement you're going to have a couple of openings. You'll have one main opening, your income taxes. Your income taxes on your income statement will be divided between current and non-current. You just need to ensure that these are incorporated correctly. And you need to ensure that your EBIT is also linked directly to your income tax schedule. Your balance sheet.
Farid, I just wanted to let you know there's 1 minute to go, but for those of you who are able to stay on, we are available to continue to finish through the entire material for today. Just wanted to give you a heads up. If anyone needs to drop off, feel free to do so. I've shared the links to the virtual delivery as well as the e-learning self-study, 2 available options from VIFtraining.com. So please stay on if you are available to.
Thank you, William. Thank you. Yeah, you will receive a copy of this webinar and you will receive a copy of the presentation. But if you need to head out, thank you for joining. Otherwise, we are just going to continue. We are almost done. So regarding our financial statements, yes, the balance sheet, there's one major item you need to have, and that is your balance sheet check line. Just to make sure that your assets equal your liabilities plus equity. When your balance sheet balances, you know you've constructed the model correctly. Well, hopefully, unless you get very lucky. Most likely, you've constructed the model correctly. And the only item that you need to be aware of the cash flow statement is the revolver. You just need to ensure that you've calculated your revolver correctly and that it's integrated correctly into the financial model. Okay. Each of the 3 financial statements should be printable on their own. So the income statement should be printable on its own, the balance sheet and the cash flow. Under either method, whether you're using the vertical or horizontal method of constructing your model, ensure that all 3 statements are on one sheet. Okay, this is one of the 2 output sheets, and it just makes it much easier. Okay, because again, these 3 statements are more or less going to be links from your calculation schedules. So they don't need to be on their own sheet. And again, for your financial statements, take 3 minutes to sense check your outputs. Ensure that you've linked everything correctly. There are some items that you could have linked incorrectly, but your model will still balance, such as revenues and cost of sales, potentially. But regardless, just take a few minutes and just confirm that sense check your model. Make sure it makes sense. If it doesn't make sense, go back and tune it a bit. But remember, you need to work quickly and efficiently. So now the summary sheet. Let's talk about the summary sheet really quickly. We've kind of already discussed this, but you should be highlighting the key pieces of information from your model, the most relevant pieces of information. Again, you're not restating your 3 financial statements here. You're just pulling the most relevant pieces of information. Okay? And again, make sure it's printable and sense check it. If you want to apply ratios, such as profitability measures on your income statement or any liquidity and solvency measures on your balance sheet, and even any cash flow calculations you would like to use on your cash flow statement, please go ahead. This is again part that's left, that the FMI leaves up to you. Similarly to your scenarios assumptions. Okay, it's really this is where you can really show your stuff. And again, under your scenarios assumption, you have 3 scenarios: your base case, upside, and downside case. Your base case are going to be those assumptions that have been provided to you in your case study. Your upside is going to be the better of those cases, and your downside is going to be the worst. Again, like I mentioned earlier, I like to use the 10 up, 10 down method. Basically, taking my base case, and for my upside, I will increase it by 10 or 15%. And I'll do the same thing to the downside, but I'll reduce it by the same amount. That way, it gives you kind of a nice range to see what's going to happen in your financial model. So something to keep in mind that we recommend: save the scenario sheet for last, because if you're only going to sensitize 2 or 3 items in your financial model, you can link those at the end. It doesn't take that much time. Okay, it doesn't take more than like a couple of minutes to link those items, because if you're linking inflation, well, your inflation only goes in 2 places. It goes on your revenue sheet and your cost of sales sheet. It doesn't need to go anywhere else. You can kind of link it there. In terms of volumes or pricing, you can do the same thing. It only goes one place. It goes to your revenue sheet. So if you've done that correctly, it's probably the easiest part of constructing your financial model. The scenario sheet is not difficult by any means. It just takes a little bit of practice to get comfortable with it. And this is where you need to decide what method you're going to use, whether you're going to use the choose function, the index function, the if function, and you need to make sure that you're comfortable with it. It doesn't, there's no preference, there's no right or wrong way to do it. It just needs to work. Okay? It needs to be.
Hi, Farid, we have a good question. Is there a grading rubric available to see how much you would be affected, if, i.e., the balance sheet doesn't meet, or anything that can help guide how the points are scored? So
the FMI actually has not released any sort of grading rubric. They have just stated in the material that they have released of what they want to see. So they want to see the 7 schedules. They want to see the integration of your scenarios. They want to see, with the base case, upside, downside. They want to see a summary sheet. They mentioned what they want to see, but we don't know how much each item is worth in total. This we really don't know. They haven't made it clear, but again, they have given you practice exams, right? Or solutions, I should say. They have 2 models that are sitting on their website that you can download at any time, and if you download them, you can see exactly what they're looking for. This is a model that we pulled right off of the website. Okay, right off of the FMI website. This is essentially what the solutions will look like come test day. This is what you need to be able to construct. If you can construct all of these schedules, in the 3.5 or so hours, 3.5 hours, you'll be I don't see why you can't do it come test day, right? If you understand how the schedules work, if you understand the accounting behind them, and you know how the integration of the 3 financial statements are supposed to be, it's really just at that point it's just a game of speed, right? If you can practice enough that you're comfortable integrating the statements and formatting, if your speed with Excel is there, you should be fine. There's there's really nothing stopping you at that point. So let's just go over a quick game plan. Including today, you have 31 days to go till exam day, okay? I hope you've registered. If you haven't registered, you have until, I believe it's 14 days before the exam. William, do you know, is it 12 or 14 days? Are you aware? Regardless, you have about 14 days before the exam. So that gives you about a week or two at the most, roughly, right? Until what, October 10th? So yeah, roughly 2 weeks to sign up. Sign up, take all the time you have, all the time you have available to prepare yourself. Okay, download the sample models from the FMI website. When you sign up, I believe they will send you a couple of models so you can practice with. So practice with those models. Okay, we are going to be holding a special 5-day course to prepare you delegates for this exam. Again, from October 11th to the October 15th on virtual. It's going to be a virtual live course. I will be teaching it myself. So if you want to have 5 full days of preparation, register for that course. I'll be happy to see you. We also have our e-learning, which William has already shared. And again, it covers everything that 5-day course will cover, except it will be a video series where you can rewatch. There's a couple of financial models in there that you can download and practice constructing. But we will say you should time yourself. Time yourself on each of the individual schedules, okay? If I were you and I wasn't super confident as per today, I would basically take each of the individual schedules. I would download a couple of practice models. I take the schedules and I would rebuild them with my own assumptions over and over again until I can construct them in 10 or 15 minutes per schedule, okay? If you can do every schedule in about 10 or 15 minutes, there's 7 schedules. That's about 2 hours, if you take 15 minutes, right? You have 4 hours for the whole exam. If you can do them in 2 hours, you can spend another, 20 or so, 20 minutes or so integrating your statements, another 20 minutes or so, constructing your summary sheet, 10 minutes on your assumption, 10 or 15 minutes on your assumption sheet, and 10 or 15 minutes on your scenario sheet. You're still below the 4 hours, okay? So we'd recommend practice every single day. Practice 1 schedule a day until you can get comfortable constructing the entire thing in 3.5 hours, okay? Once you're at 3.5 hours, you should be good to go. There's no reason that you shouldn't feel confident coming into the exam come test day, okay? Now, these are all the tips that we had at Virginia. Our website again is viFtraining.com. If you have any questions, send them to info@viFtraining.com. You can find my contact information and William's contact information on our company website. We offer courses that range from finance, data analytics, risk management, and leadership. All these courses are offered virtual, live, and in person on our website. We do offer courses here in Dubai, and I believe we do have courses in the US, both virtual and live. I'm here to answer any other questions that anyone may have. Otherwise, you will receive a copy of the presentation and a copy of this video in about the next 24 hours. So keep an eye on your email. If you have any questions, please ask them now. It will do nothing but benefit everyone, especially the people who had to leave early and are watching this on replay. William, is there anything you'd like to add while we take a couple minutes to wait to see if anyone has any questions? Any of your personal tips?
For anyone who does sit for the exam, don't get bogged down if you're stuck in one area, because it'll just spin you up and to take away from the other areas you can work on. Just move on, fix up everything else that you can, and then go back and look at whatever part you were stuck on.
That's a very good point. That's a very good point, especially if your balance sheet doesn't balance, like I mentioned. Finish construction of all of the other pieces of information you need to, all of the other schedules, all of the formatting, and then spend the last 15, 20 minutes, whatever it may be, trying to balance your balance sheet.
All right, I think that is everything. Thank you everyone for your time today. And please let us know if you have any questions, and we look forward to helping you pass the FMI, AFM Level 1 exam.
Yes, thank you guys. Thank you everyone.